The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. I'm your host, Steve Rhodes, and welcome to the Trader's Edge, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. I am here to inspire you, folks, and mostly to lay the groundwork, really, so that you can lead an inspiring life, folks, because that's really what it's all about. It's all about leading an inspired life. Now, do you know, just start off with a quick question. Right now you got the futures, quite frankly, giving back everything that it gave yesterday, and we're going to go into the markets here real quick. But let me ask you a question. I always like to start off with questions. After all, questions control our focus. Do you know of anybody in your life? Do you know of anyone, folks, that maybe complains about things? You know, a complainer. Now, here's my viewpoint with regard to complaints. Actually, you don't hear me complain about really almost anything. You know, as I started saying, hey, what can I lead off with this morning? Just decided to start with complainers. I hear them, I see them all the time. But here's my philosophy on complaining, folks. If you spend 5 minutes complaining, you just wasted 5 minutes. And time, folks, is something you can't get back. Money, I can teach you how to get back money. I cannot teach you how to get back time. Now, if you continue complaining, folks, here's what happens. It won't be long before they haul you out to the desert, the financial desert, folks, where you're going to start choking on the dust of your own regret. Here at TFNN, it's no regrets, folks. No regrets at all. So that leads me to the philosophy of the rich versus the poor. You know, you hear about all this stuff in the media all the time. Really kind of upsets me. Because obviously, you know, they're wasting your time talking and complaining about things. So the philosophy of the rich and the poor goes like this. And think about this. You might even want to write this down. The rich folks, the rich invest their money and then they spend what is left. Thank goodness they spend what is left, folks. The poor, they spend their money and they invest what is left. Usually there is nothing left, folks. You know, we all know a variety of ways to make a living. What's even more fascinating, though, is when you spend time and you figure out ways to make a fortune. That's what it's all about here at TFNN. We want to help you make a fortune. We want to help you to understand what's going on in these markets. If we take a look at the markets right now, you got King Dollar trading out at 82.93. No surprise there that the group in Euroland have no clue as to what what they're doing. They are meeting absolutely over the course of the next couple of days or what have you. And what they're meeting about, they're crafting their next PR release, folks. That's what's really going on out there. You got the Dow futures off almost 100 points. You got the ES Mini trading out at 13.16 right now. It's on its way to 13.03. That is at least the first stop out there. We'll take a look at it. And you could say, Steve, how do you know that? I just follow the yellow brick road. It's as simple as that. The yellow brick road, that's the A to B equals CD patterns that is out there, folks. And so we're going to go ahead and we're going to take a look at the A, B, CD patterns just on the 10-minute chart, giving really beautiful pattern configurations out there. You've got the Dow future, the NASDAQ futures off about 17 points. The Russell 2000 off 7 points. Gold trading down $15 out at 15.62 right now. Hi-ho silver off 26 cents out at 26.69. Late sweet crude flat as can be. You can do some water skiing. It's trading out at $80.21. Over in Europe, you got the DAX down 108 points. The FTSE off 67. Nice showing by our friends over in the Nikkei in Japan last night, up 1 6/10%. Of course, we handed the ball off to them, and so they were up. But you had the rest of Asia down. You had the Hang Seng off 151 points, 0.8%, and the Shanghai off almost a full percentage point, down 22 points. Our call-in number, folks, 877-927-6648. And for any of you that had some difficulties this morning logging in to the TFNN site or getting your newsletters and so forth, absolutely we apologize. apologize for that. We had some technical server issues. I think they're all being repaired right now. So, log into the TFNN site, check any of the archives or any of the newsletter links out there, and just, not going to complain about it, because we are not complainers around here. I'm not going to waste your time. And so if we take a look at these markets, let's go. We're taking a look at the ES Mini 10-minute chart out there. And, if you listened to the show yesterday, which I'm sure that you did. Now I'm going to go ahead and get rid of some of the patterns that are out there. We were taking a look at the ES Mini 10-minute chart, and what we had projected here, we had projected a high coming in at about the 1327 mark. Now, that was nothing more than an A to B equals CD, and that A point, folks, started off with one of my favorite candles, and this is one of the candles that I own. This is a hammer candle. I'm happy to lend it to you. Absolutely, because I want to lend it to you because it'll help you to make a fortune. You'll be able to understand if you're short the market and you're trading intraday, you'll be able to understand where it is that maybe you should tighten up your stop. In fact, not maybe, where you should absolutely tighten up your stop. You made a hammer candle coming into the time frame of 11:20 on June 26. You got a confirmation on that very next candle. That set up our A point. You don't know where the B point. In fact, what you want to do is you want to let the market. I love leveraging. Time, folks, I said you can't get back time. And the key here is to be able to leverage things in your life. I love to be able to leverage the market. Let the market do 75% of the work for you. That's what it's doing. When I say 75% of the work, I'm talking about let it identify the A point. We can identify that. That's an easy thing to do. Let it identify the B point. Well, that's pretty easy because you're just going to sit back and you're going to watch the chart patterns unfold. You're going to look for those major intersections. You're going to look for when all of a sudden price changes direction. Excuse me. In that case here, the B point on a 10-minute chart changed direction as it got into the 2:30 time frame on June 26th, up at a high of 1318. Pulls back. Now, the pullback that it did, only about a 0.382 retracement. Remember, there's 3 retracement numbers that you want to be able to have on your retracement toolbar. You want to be able to have the 0.382, 0.618, sweet 618 that is, and you want to be able to have 0.786. In this case here, what you can see, the 0.382 retracement from A to B was 1312. Where did the ES Mini actually pull back to? I don't know how it does this. 1312.25. The actual price point, which is impossible to make, is 1312.37 because it only trades in quarter points. So this projects 1312.25. It pulls back to 1312.25. Now, ordinarily, you have a 0.382 retracement. Says that what you're going to do is you're going to do more than a 1-to-1 A to B equals CD. But if you learned how to master that C to D leg, folks, you would realize, that was not likely going to happen. That's why I said 1327 was our target yesterday in the ES Mini. What happens to the ES Mini? It moves up. And look, folks, I didn't get it exactly right. It moved up to 1327.75. Missed it by 75 cents. Sorry about that. Hopefully, you'll forgive me. Now, what happens is, in this case here, you had the ES Mini go ahead and give you the confirmation that the price move to the top was done. It did that at about 1:20 in the afternoon. It made this little bearish engulfing candle. Did that, it confirmed it on the following 10-minute session. And then, now with the markets around the world yesterday, they all closed at their highs. If I go ahead and I put the world charts, we'll just kind of go back and forth. Hopefully you are watching this on TigerTV. If not, what you can do is you can go ahead and catch the archive of this show on Channel 9. Now, if you take a look at the world markets yesterday, and I'll just, kind of do this here quickly. Here's Germany. Now, don't look at today's candle, look at yesterday's candle. What did it do? It closed out at its session highs. Let's go take a look at the FTSE. What did the FTSE do yesterday? The FTSE closed out at its session highs right here. Right here, that green candle that you're looking at. Of course, today it's trading towards its session lows. That's a whole other story. What did you do over at the Nikkei yesterday? Closed up towards its session highs. What did you do at the Hang Seng? Closed up towards its session highs. What did you do in Italy or Spain? Closed up at its session highs. What do you think was the likely outcome then of yesterday's markets for us? Absolutely. You were going to close up near the session highs. If we pull up the indexes, that's in fact what we did out there. It's why what you want to be able to do is you want to put all this together as a one world market, because the universe is always giving you clues on a continuous basis. It's just a matter of whether or not you absolutely want to read the signs out there. I know you want to read the signs. I want to teach you how to read the signs. So it is important to pay attention as far as what's going on in the markets. Here's the Russell 2000 yesterday. Where did we close? up towards its session highs. Take a look at the other indexes out there. Take a look at the S&P 500 up towards its session highs. So you see, we got clues in the marketplace by taking a look at the ABCD patterns on the futures contract. And the futures contract, folks, don't let that scare you. This is just something where you're getting continuous information, and it makes it much easier to understand what's going on in the marketplace. It's going to make you understand who's in control of a session. Is it the bulls or bears as you're coming into D points? Are you doing it with wide price spread? Are you doing it with accelerated volume? Right now, what you have going on here is you've got the A to B equals CD down. You got a perfect makeup of it. And that perfect makeup starts out here at the highs right in the, and we're going to use 240 in the morning when you had the ES Mini at where? 1327. So the same point. So all that happens last night, for many, many hours is you just simply trade sideways. So it couldn't bust it up. We knew that they gave us enough indications that it wasn't going to bust it up. And so that became our A point. That was our A point. Our B point ends up being made this morning at about 6:10 a.m. You had an initial B point, folks, that occurred right here at the 4:40 a.m. time frame. So it looked like that was going to be our B point, and our C point was going to be right up here at 5:20. But let the market do the work for you. If you were already in this trade, let's say you were short the market, you're just waiting for the market to unfold, you're waiting for the B and the C point to reveal itself, and then you're going to focus on that C to D leg. That's all you have to do. If you're not in the market, you don't chase it. You wait for the next D leg to complete, and then you go ahead, and if it's market's moving down, you buy it. If the market's moving up, you sell it. It is that simple. That's how you make a fortune in the marketplace. That's how you don't complain. And here we don't complain about what the market does. We can't control the market. What we can control, though, is our emotions. We can control how it is that we trade. We can control how it is that we read the signs. We can control our money management, folks. That's why you also need that position size tool that is on the homepage of TFNN.com. Just go on the left-hand side. You'll see those arrows up and down, and that is my tool for you. I can't imagine trading without that tool. Even at least if you don't use that tool, use the exact 5 steps that you need in order to be able to identify your position size. Well, this A to B equals CD down, folks, that takes you to 1312. And you can get down into the did I say 1303? I think I might have. No, did I? I think I was saying 1313. Well, that's certainly what I meant. That's your A to B equals CD. Take a look, and ES Mini ought to trade down to 1313 today. Maybe 1309. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And surging in the pre-market happens to be ticker symbol SURG. You got to love it. That's Synergetics, folks. Of course, it is a biopharma drug company out there. SURG, they closed out at $3.87 last night. They're trading out right now at $5.41. Some type of FDA clearance on Versa VIT is the drug of choice this morning, leading the market dollar wise on the way up in the pre-markets. That is, you've got Orexigen Therapeutics, OREX. They close out at $4.92. They're trade out at $5.50 right now in the pre-market. And that's really it as far as what is popping. Dropping, though, on the other side, on the pharmaceutical side, you got Vertex Pharmaceuticals. They closed out last night at $61.11, trading out at $53 and a little change here right now. Looks like some issue maybe with their final data from the their phase 2 study. You've got Family Dollar Stores, FDO ticker symbol, closed at $69 last night, trading out at $64 and change. Let's see what is the issue going on here. Family Dollar Stores Q3 earnings. They got a conference call at 10 o'clock today. Operating profit. Okay, so let's see here. They had earnings per share. I really don't see what so their operating profit. Okay, operating profit $199 million versus $184 from the prior year. So that has been a high flyer. Family Dollar Stores. You've got Energy Transfer Partners, ETP is the ticker symbol. They closed at $45.98, trading out at $43.79 right now. Deutsche Bank DB closed out at $35. They're trading out now at $33.49. You've got Anthera Pharmaceuticals, ANTH, trading out at, is that right? Well, here's a haircut, folks. They got a brush cut. Anthera Pharmaceuticals closed out at $2.75 last night. Now they are part of the Dollar Store, trading out at 97 cents. So that's quite a haircut. That certainly fell out of bed. You got Barclays, BCS, folks. They closed out at $12.33. They're trading at $10.66. J.P. Morgan down this morning. They closed at $36.78. They're down trading at $35.30. I suppose that's on the news that their two billion loss, might be something more like $9 billion loss. And what was interesting is the day that they announced that, Tom and I were doing a show together. I can't recall if it was a morning show or an evening show that we were doing. And the very first words out of his mouth were, it's not $2 billion. It's going to be $8 billion. Now, I don't recall if he said that on the air or it might have just been our conversation. And he's on vacation, but that's not a bad call, folks. So maybe it's closer to 8 to 9. But you know, he was Tommy on the spot, if you will. eBay trading down this morning as well. 42.29 was their close. They're trading out at $41. You've had, quite a whipsaw effect. If you take a look at the markets, just simply take a look at the opening on Sunday evening in the markets. If we take a look at the futures, in essence, opening right around the 12,566 in the Dow futures here, 12,459 after a little bit of a yo-yo effect out there. Let's go take a look at some of the metals here right now. While we have a minute or so before we go into our next break, let's go take a look at high-ho silver out there, see what silver is doing, so I can find the tab. There we go. So we're going to take a look at silver. Now, what I have here, even though it looks like a little bit of a mess in all the lines, pay attention to the two black diagonal lines that are out here. This is really I always like to be able to come back at a chart and just simply redraw any other patterns that are out there. And a couple days ago, and I did this for my subscribers, my clients, it's what you have to do. You have to always be willing to redraw the charts because, as I say, the universe is always going to give information to you. And if you always look through the same set of glasses, you're going to see the exact same things. You should always be looking at a chart trying to identify both the bullish and the bearish side of it because you should be innocuous with regard to, what the market is doing. Take the position that makes sense or get out of the position if it doesn't make any sense here. And when you take a look at, as I've mentioned, silver here gave us the long-term bearish signal back in November 2011 when it was trading out in the $34. It's trading at $26.70 right now. And what it also is doing, it's going down and it's trying to test the low of the hammer, one of my hammer candles, September 22nd. I lent that to the market. That low is 26.15. What you can see here with silver, though, silver is in this downtrend channel, with inside a larger channel, I might add, but it's inside this downtrend channel. When you want to short silver is when it's up towards the top. When you want to go long silver right now, folks, is when it's towards the bottom. This says silver has a long way to go to the bottom there, folks. 877-927-6648. We get back, we'll go see how these markets are going to drop. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow off 97 points, S&P off 11. Composite down 32, small caps off 6, Microsoft down 53 cents right now, Intel off 42, Google down $8 and change. You got Cisco off 23 cents, Apple down $3. Let's see here, you've got Surge leading the charge on the way up $1.48. Last trade out at $5. That's up 37%. Let's see here, Ellie Mae Clampett up 5 pennies. That's up, a 5%. That's up 86 cents out there. Encanacorp, ECA, that's a natural gas play, up 4%. That's up 91 cents right now. To the downside, Vertex Pharmaceuticals, we covered that in the pre-market. VRTX are off 8%. Family Dollar Stores right behind them, down 4%, down $3. And Apple, $2 and change. Energy Transfer Partners off 5%. Amazon down $2 and change. Deutsche Bank down $1.80. LKQ Corp down a couple of bucks. Tahoe RES, I don't know what RES Resources, Tahoe Resources would be my guess. Nothing pops up. TAHO off a couple bucks. Baidu down $1.60. Again, our call number 877-927-6648. Let's take a look at continue looking at silver here. We're taking a look at high-ho silver before we went to break. And so there's a couple of downtrend channels right now that we're looking at in silver. You've got the larger downtrend channel, folks, coming all the way back to the highs that were put in the April 2011 time frame when you had silver up in the $49 range. You want to take the body of that bar as one of your touch points. Next time that you have 2 touch points is going to be the highs in August of 2011, out around when silver was at the 40-90-ish area. And so that's going to establish your more than 3 touch points out here. You did have silver try to break out. Quick false break to the upside in February 2012. Immediately got back inside this longer-term channel. Again, this going back into the May 2011, so it's over a year old. To the downside, you can see how price has been maintained with inside this downside area. Now, what silver is going to do is silver is going to at least test two areas that you're looking for. December 29th, the low out there being $26.14. And then you've got the real test, which is the big hammer out there. That is down at $26.15. A lot of volume there, but you're going to want to watch for silver as it makes those tests. Now, if we take a look at gold, and you've heard me, I'm calling for gold to get into that 1155 area. Now, when you draw the same chart pattern out there. Now, I don't have the longer one here. I have the most recent downtrend channel that gold has been in. And what you can see, so we've got a little bit of divergence here. Definitely gold stronger than silver right now. Now, gold gave us the long-term bearish signal back in the middle of May 2012. That's when we had the 50-day exponential moving average cross through to the downside over the 200-day exponential moving average. And so that gave us our long-term bearish signal. When it does that on the daily chart, let me tell you, it's screaming with a bullhorn out there, folks. And you can also see how the 200-day exponential moving average has acted as a very strong resistance line. Each time gold has gotten up there, it has said no way. Now, what gold did actually do, though, when we take a look at that wide price spread day of June 1st, what gold actually did was it did break topside. It did break out of this shorter-term downtrend channel. And then it broke out, and it continues to test it, but it stays on the outside. Right now, what you'd be doing if I were trading gold, which I do, and if I were you, so I'm suggesting that what you do is you actually draw this downtrend channel in there, and you pay attention to it, and the next time that gold gets down and tests that area, if it tests and it holds that area, that's where you could take a shorter-term intraday, trade, maybe even in one of the triple ETFs that are out there. I can tell you the upside potential on any spike up in gold is going to be that 200-day exponential moving average. So that's an easy one to be able to stick on your charts. You ought to do that if you, in fact, are trading this vehicle at all. So that's on our metals out there. If we take a look at what our bonds doing today, what's James Bond doing? Really not a whole lot. Yes, trading up at the 149.24. That's on the 30-year Treasury bond. But really, you've had bonds in a very much a sideways building cause consolidation pattern, really going back into the early part of June, and it's almost the end of June. Tomorrow, I believe, June 30th, the end of the month. Summer is clicking by just like that. Time, folks. Can't get back time. Always take action and take massive action. If we take a look at natural gas is out there taking all kinds of action. You got natural gas trading out at 281 right now, 2.81, and it did make its first A to B equals CD down. Now, this is the 10-minute chart that I've got up on my screen here. It looks really the same pattern set up on a 30-minute chart. Now, what natural gas did was it came back to a little bit of a whale that was out there. When I talk about a whale, I'm just simply taking a look at a high-volume bar out here. And during that high-volume bar, you had 8,900 contracts. So you can see that whoever this is, they're still in the trade. And they're in the trade because they certainly supported it as natural gas got down to that level. So, you've got natural gas bouncing around this area. Let me put this on a different time frame here. Real quickly, I just wanted to update my chart here. Make sure, there we go. Okay, so I wanted to update the chart there. Now, what you can also see here with regard to natural gas is if you take a look at from the A point, so it made an A to B equals CD, but it didn't give you any kind of bullish sign. In fact, it gave you a bearish sign. I mean, it stopped where it was supposed to because of the little whale. It's not a big whale. We got big orcas, right? That's not an orca. That was probably just a humpback whale. We're going to call that the humpback whale on the stock charts out there. And, so you had the wide ranging bar on the move down. And so what natural gas has done on the intraday charts, it's made another retracement. Didn't get all the way up to the 0.618 area. And so it looks like this is going to set up perhaps another A to B equals CD down, which would be a nice thing. That means it come and attack this area again. When I say this area, I'm talking about the 2.733 area. Trading up, yes. but I think that natural gas wants to pull back just a little bit further. If we put this on the daily chart, you'll see that this also came very close to completing an A to B equals CD up pattern. So natural gas, you'd love to be able to see this thing truly. You'd love to be able to see this thing pull back into the 2.55 area. We're looking on the contract. We're looking at the middle of June, the June 15th area. And if we just simply take a look at retracement of the A to B equals CD, what you'll see is that ends up being really a 0.382 retracement. And if that's all that it does, and you make a nice A to B equals CD down into that area, because that is a day of strength. When you take a look at that, you've got a couple of them out here. You certainly have this wide price spread day on June the 15th. You've got some nice volume there on June 18th as well. That was on the Monday. Got the Dow off 103 points right now. S&P's off 9. Let's go take a look at just simply the indexes, see where we've got things trading down to. So if we take a look at the NDX 100, so the NDX 100 gapping down this morning, coming and testing June 25th. So that was Monday's downdraft. Hasn't gotten all the way down there. The low on the downdraft is 25.27. It has traded down to a low of 25.30. So now here's the thing, folks. I'm going to go ahead and delete some of this stuff off of here. So what you can see yesterday is you had a bounce. Now, I certainly was calling for the one-day bounce that we had. Today's Thursday? On Tuesday. The indicators just suggested we were going to have a one-day bounce. Looks like we had a two-day wonder, not a one-day wonder. Now, if all that you get is a bounce to this 0.382 area, and I suppose sometime around 10 o'clock or so, we're going to get another response in the market as the Supreme Court reveals what its thoughts are on the health care program that is out there. If all that the market got was a 0.382 retracement bounce of this, smaller A, B equals CD leg that's out there, what you will see is the NDX 100 go down and test the lows of June 4th. Because if you only do a 0.382 retracement, folks, you're not going to just do a one-to-one. You're not going to go test the highs of June 4th. You'll go down and you'll test the lows. The lows of that are 24.43.92. That is on the NDX 100. Let's go take a look at the S&P cash out there. S&P cash here trading out at 1322.50 right now. Really the same pattern setup. You had a two-day wonder, and that must have been that the single on both sides of the record were actually hits for 2 days. Now, what the market did here, the S&P, if we blow this up, you can see that it made a retracement just above the 0.382 level, closed above that. Typically, that indicates that you would go travel where? To Suite 618. If all the S&P cash has done is a 0.382 retracement, and you take a look at your A to B equals CD down, what that will set up, folks, that'll also set up and confirm a test of the June 4th lows. That would be 1266.74. And so if we continue to get a lower close today, then it looks like that's really what the market wants to do. It wants to move down and go test those June 4th lows going into next Tuesday, July the 3rd. And, of course, you can say, Steve, how the heck can you say that? How do you know that the market could move down into Tuesday, July the 3rd, just before the holiday? Because it's Full Moon Tuesday, folks. We'll have to get our full moon voices out there. I'm not going to howl at the moon at you. I'd rather let Al in the production studio throw out one of those full moon sounds out there. There we go. That's my howl at the moon. So, we'll pay attention and watch that chart pattern as well. You got Chipotle now lead the charge on the way down. So let's go take a look at that stock. It got hammered yesterday. I knew there was something wrong with their salsa when I went in and I shopped at their store. Tried it more than once, folks. I tried it 2 times, tried different things, and said, I don't get it. So, of course, they were making money, and it's not a matter of me to get it. It's a matter of taking a look at the stock patterns that are out there. And if we go take a look at Chipotle, CMG is the ticker symbol. Okay, I just have to find the right tab that I've got it in. Here we go. Give me a second here to pull that up. So that is trading off $7.78. Looks like Panera is also trading down this morning. So Chipotle gapping down now. So Chipotle taking on the B point, trading underneath the B point. B point on Chipotle is May 21st. The low there, 384.40. $3.49. It's trading out at $3.83 and change. Now, 676,000 shares is what you've got on May 21st. What you have done this morning is 177,000 shares. So about 200,000 versus 676 we have traded for 16 minutes. I'd say Chipotle is ready to take out the B point. And so where is now here is the danger, and we're talking major danger, folks. The first area of support, and it's really going to be at the 1-to-1, A to B equals CD, but I kind of take a look at this as minor support. You got 1.4 million shares. And that price level, folks, is where you'd make a 1-to-1 A to B equals CD. That's at the 358 level, the 370 level. More likely where it wants to head to is really the last breakout. The last breakout being October 20th, 2011. That's down at around the $300 price range. So let's say you happen to be one of the folks that was in the trade here, and you decided to totally ignore the first signal that the universe gave to you in Chipotle. The first signal came on April 20th. Why do I say it was the first signal? You had institutional selling right off of the top. You did 2 million shares, folks, and that was, again, on April the 20th. Now, what Chipotle gave the opportunity to do was just simply get rid of the stock. You know, it gave you plenty of times. It didn't break down. The real breakdown started yesterday. You now have another breakdown. You know, you're coming through the B point. You're gapping down. This is not what this is not what a leader does. Leaders don't break down, folks. Leaders just simply stomach the pain and keep moving forward. That is not what you are seeing here in Chipotle. So you've got Chipotle breaking down. Let's go take a look at Panera. That was also trading lower, trying to attack the lows from yesterday. And Chipotle is really, let's see here, Chipotle trading inside the swing point. This is going to be, its next swing point that it is taking on. That is going back to June 5th. The low out there, 135.58. That has 647,000 shares yesterday. Not too bad. You came into it with 900,000 shares, right? Says it wants to go test the bottom for sure, folks. It's going to go test 135.58, I suppose. Let's go ahead and take this back, pull this back here. This thing is in distribution mode as well. Making A to B equals CD down. You're going to see Panera Bread come down and close the gap. That's going to be at the 118 level. It's trading at 137.95. So if you've got nice profits in on this stock, folks, why would you, hopefully you got stops in place at least. Hopefully you've got some decent money management in place. Why would you stay inside this? It has had its run. When we talk about having its run, we're talking about going back to the 2008 time frame when it traded at $32.60. It's trading at $138 right now, folks. So it has had a nice run out there. Let's go take a look at, when we come back, didn't realize we were that far into the show. When we come back, folks, we'll go take a look at MSM. It's MSC Industrial Direction or something like that. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Have the Dow off 97 points. And if you take a look at the Dow, inside the Dow 30, you've got two stocks traded to the upside. Oh, one stock. You've got Home Depot up 19 cents. You've got leading the charge dollar-wise on the way down. You got IBM off $1.80. J.P. Morgan down $1.25. United Technologies off $1. Travelers off 80 cents. Walmart down 80 cents. 3M off 50 cents. And the IBD 50 stocks out there, you have looks like 3 stocks now that are green, 4 stocks that are green, and the rest of them are red. The leading the charge on the way up, Polaris Industries up 96 cents. Then you got to dig real far into the bullpen. Got to go to Sherwin-Williams up 12 cents. Leading the charge on the way down, Chipotle down $8. MasterCard off 6. Priceline off 5. Family Dollar Stores down a couple bucks. Let's go to our co-host in Boston. Let's go to Dave. Dave, thanks for calling. Thanks for holding.
Steve, I always wanted to co-host 4618.
All right, you got it, man. Hey, our fans, they love your voice. They say you got the natural radio voice.
Oh man, I'll tell you. I got a face for radio too.
Perfect. That's great.
Hey, real quick.
Yes.
I know that we still can't access the newsletters, and they're working on that. But
oh, really? Okay, I didn't know that.
Game plan. If we bounce, it looks like we're bouncing. We came down to 13.14 on the ES.
Yes.
We're up to 13.18. Would you take a long here?
I wouldn't do. I'm not going to recommend doing anything until after we see how the market responds into the 10 to 10:30 time frame.
Gotcha.
I think that's really the only thing to do here is just simply be patient.
Right.
I imagine that we'll see some type of reaction. We know we're going to get different press releases out of the folks in Europe, but you can't hang your hat on anything that they come up with.
Exactly.
But I think that we should just simply wait until the 10:30 time frame. So
okay.
Thanks for letting me know about the newsletter, because there is a potential trade depending on how the market responds to the Supreme Court stuff out there. So.
Yeah, I spoke to your office. They're working on getting it out as soon as possible. So.
Okay.
All righty, Steve. Listen, hey, you have a great day. I'll be listening to you next show.
All righty. Thanks, man. I appreciate you calling as well. Okay.
Bye-bye.
Yeah. And, folks, we're taking a look at the ES Mini here, and it's trying to complete an A to B equals CD down. That pattern would complete. The 1-to-1 would complete at 13.13. And if we take a look at just simply the retracement off of the low that was established off of my hammer candle that came in yesterday morning at 11:20 down at the low of the 13:03 area, and just simply go up to the high that was put in. The high was put in at 4 o'clock. Coming into the 4 o'clock close out there, you'll see that also at that 13.13 area is a 0.618 retracement. So I know that's why Dave was, on the great call there by paying attention to it. That is where you would have a Gartley buy pattern. But this is a 10-minute chart, and what I wait for, even if the pattern completes, is I wait for other signs to know that the pattern has completed here. So we're just a few minutes away. I guess we're a few minutes away. I don't know how the news media came out with 10 o'clock on the dot. I don't know if that's really the case or not, but sometime this morning we should hear something about the health plan, and I suppose that that's going to have some type of initial impact in the markets. Now, typically, folks, when you have big news releases, whether it's the Fed or what have you, typically the first direction is the head fake. It's the Michael Jordan in the stock market. It's the Magic Johnson in the stock market, to throw you out of your shoes. So oftentimes that first response ends up being the wrong direction with regard to the way that the markets will travel. We'll see if that's what unfolds here. So thanks so much for joining me, folks. As always, great to be with you. I'll be up next filling in for Tom and myself doing the Money Masters show, and it is Terrific Thursdays, folks. That means we go to Kate Stalter from 11 to 12, Larry Pesavento from 12 to 1 doing the Futures Hour, Ken Shreve 3 to 4. I'll be filling in for Tom from 4 to 5, and Basil Chapman from 5 to 6, folks. Have a terrific morning. I look forward to seeing you soon. Bye-bye now.